All right, everybody. Happy Monday. Good to see you here. I'm Rob Booker. All trading involves a substantial risk of loss, right? Leverage trading in foreign currency or off-exchange products on margin carries significant risk and may not be suitable for all investors. And as a side note, and very important, this video is sponsored by IG US LLC. Welcome, folks. What I want to do today is jump on over to the economic calendar for the week. And I want to talk about the economic calendar. And then I want to see if we can maybe find a couple of the most important events and where they might play out. So we've got the zoo. That's already out. So the zoo came out. Housing starts. I don't really care about that. That doesn't matter. Inflation in the UK. That doesn't really matter. And CPI in Japan doesn't really matter. Weekly jobless claims, 2 million estimated. Again, another 2 million jobless claims. That's the most important. It's the most important figure. It's the very most important of all of the economic releases that we can possibly have. And the unemployment rate, the number that's reported, the May non-farm payrolls that are reported in June, that's the most important. The weekly jobless claims are the most important. These things are super giantly important right now. And as we look at the dollar yen and the pound dollar and the euro dollar and some other currencies today, I think what we really want to look at the long-term charts and ask ourselves, what are we really about to witness? What are we really about to get into here? And the FX market is where this stuff kind of plays out, right? This is the canary in the coal mine, so to speak, is going to be the FX market. You want to know where the equities markets are going to go. I think you need to follow the money. You need to follow the money flows. And if the money's flowing into the United States, if the US dollar is doing well, it's a sign that that money is going into the US dollar so that either they can buy treasury bonds in a time of crisis, or they can buy US stocks because there's a rebound. And tech stocks have certainly shown some resiliency here. Anyway, so what we're going to do here is we're going to take a look at the, let's see, what are we doing? Share my screen. There we go. Add it to, there we go. So what we're going to do is jump on over here to the IG US platform. And I want to start things off by, I just want to make sure it's looking current. Yep, I want to start things off by looking at the US dollar, Japanese yen. This is the 4-hour chart, and it is sort of crazy, right? It's a crazy looking chart. This giant V-shaped move is insane. And what usually happens, is you see that V-shaped recovery, and then you get a bowl. You get this bowl shape U. You get the V, then the U. And what's happening is we got that U-shaped. And what usually technically happens in my experience, and I'm going to share both sides of the possible story. What can happen is we then jump up from there and the dollar does well. And if equities are doing well, that's risk on, or the financial markets of the world seem strong. And there does seem to be a case to be made for a recovery here. And as America reopens, there's clearly some of that going on. You could see the dollar in, if it breaks above, let's say, 107.80, that puts in play 109. That's a previous area of resistance. And that puts in place the 111.61 and really 112 and beyond. If this happens, if we break 107.80, we go to 109 probably. If we break 109, we probably go to 112 and even beyond. But it's important to have like another perspective here. And I'm going to zoom in on this so that we can really see it. And the other perspective is this. Excuse me, I'm so sorry. The other perspective is this downward possible movement. See if I can draw a point, not a pitchfork. Let's draw point to point here. Like this trend line right here on the 4-hour chart. We break that trend line and go below 107, because 107 is really the bottom of those candle bodies. That's the support level here, that 107 area. There, let's get you. I might have to draw a brand new circle, but let's bring this over here. I won't be able to. So if we break that trend line and we move down below 107 and stay below 107 for, say, 24 hours, the counter argument to what we just looked at is that we drop below 107, and then that puts in place, there's an area of kind of medium level support at 106.50, and I think that's an easy level to get to. But then I think you got to look at 106 getting hit, and if 106 is broken, then what's happening? So this is how the canary in the coal mine is FX. If those levels are broken, what it shows you is money's flowing out of the dollar, money's flowing out of the US dollar. The Japanese yen is strengthening, and that's the real flight to safety. That's the real worry. If the Japanese yen starts to strengthen, that means the financial markets of the world are getting crushed. Money's flowing back into Japan to pay off low interest loans, and that's a major problem. And that would suggest that the equity markets of the world are going to make new lows, and that the crisis is deeper. And there's a case to be made, right? The fundamental case to be made for the bullishness is America is reopening, the world is reopening, the central banks of the world flooded the market with capital. That capital is going to go into equities. Equities are going to do well, and then rich people are going to get richer, even with all the unemployment, right? It's disgusting and wrong, but that's the case. That's the bullish scenario. The bearish scenario is everybody's out of work, and America's not reopening all over the country. So the West Coast and the East Coasts are still closed except for Florida. Texas and Florida are open. Arizona is open, but that's not enough to carry everything. And there will still be 20 million people out of work. And the real rent payment problem is going to happen in June, they say. That's why we haven't seen it so far, that people are going to run out of disposable income to pay their bills. But with the unemployment checks coming through, maybe they're going to be able to survive. So there's uncertainty, and maybe they scale back on purchases, and maybe durable goods sales go down, and maybe consumer discretionary spending, which is 66% of GDP, maybe that goes down, and then we have a real problem. I don't know. If unemployment is $1,000 a week and it goes on in perpetuity, it's possible we could last through all this. And I think that's what the Fed wants. Across the world, America is not the only country dealing with this. Of course, the other countries are dealing, and the Eurozone is dealing with this, especially really hard hit. Britain is this; they're all been hit. And what you're looking at here on the euro pound is like the inversion of what we just saw on the dollar yen. We did an empire state building jump. So a massive move upward, then a drop. And then we got this thing that it happens almost all the time, either whether or not the V is upside down or right side up. We get this weird recovery right here. And so we have the same scenario playing out. So bullishness in the Eurozone and bearishness in Britain, that takes the euro pound up. We'd have to see great numbers coming out of Europe. We'd have to see just absolutely spectacular numbers coming out of Europe. They'd have to be just exceptional. And then we could break 90. And if we break 90, we go to 91. And if we break 91, we go to 92. It's very stair-step-ish until we get up to 95. And you just watch for each of those levels. The problem is the Eurozone's probably super weak. And it's harder to open an entire continent and block of countries than it is to open up just Great Britain and a nation. So what I want to look for is, can we break this trend line? If we break this really steep trend line, that puts a bunch of these numbers in place. So if we break this trend line and go down, we go to 88, 60, and we start to drop through there. And that would be, to me anyway, that's the more likely scenario. It seems to me anyway that that's the more likely scenario, is a continuation of that downward movement. And so I think you want to just be aware of this really steep trend line on the 4-hour chart and see where it goes from there. Last of all, it was not long ago that the Euro Canadian was, because oil was dropping, was the rip roaringest financial instrument of all time. It was crushing it. And what we got is, we got a channel here. So we jumped up, we went sideways, and this is a bull flag. This is potentially leading to the next phase of movement up. And if we do move up, and if we do break out of the top of this channel here, 1.54, so $1.54 in Canadian dollars, if we break above $1.54 in Canadian dollars, that puts in place $1.55. But then after that, the entire channel, I don't know if you can duplicate a channel in this software. Can I clone it? No. Oh, duplicate. Yeah, I can. So what happens is you get a whole separate move to the top of the next duplicate channel at $1.58, or Canadian dollars. Yeah, 158. That's where you go from there. Of course, it could drop lower below this zone right here, below 1.50, and then put in place a bunch of other ones. But I'd keep an eye on this one. The Euro Canadian moving up depends on oil dropping again. It would not surprise me if it did it. It wouldn't surprise me if that were the case. That would not be a gigantic shock. The oil shock may not yet be over. But if oil prices recover, this is the currency pair you want to watch. You could watch the Canadian dollar, Japanese yen as well. But I like watching this one, the Euro Canadian. So if oil prices recover, Euro Canadian goes back to 1.48. And if oil prices do not recover and we break through 1.55, then we go 250 points to 300 points higher, 300 pips higher, 250 pips higher to like 1.58 or so. All right, everybody. Great to spend some time with you. Always excited to see how you're doing and hear from you in the comments below. Thanks for everything that you do for each other and for yourselves, of course. And I hope you're hanging in there. And all of our love out here goes to you and your family. And I'll see you this week a bunch of times. And we'll talk some more about all these things going on right now. Thanks again to our sponsor. This video is sponsored by IG US LLC. You can check them out at the link below. I'll see you soon.